Slightly bearish report, still a contractionary outlook. The USDA's June hogs and pigs report holds some slightly bearish surprises that are mostly fairly small deviations from pre-report expectations. The June 1st inventory of all hogs and pigs is pegged at 72.4 million head, a little more than a 0.5% drop from last quarter and up just slightly from a year ago despite trade expectations for a year-over-year decline. Likewise, market hog inventories are down about 0.75% from last quarter and up slightly from a year ago, while the breeding herd is up about 0.33% from last quarter and down about 0.33% from last year. Like total inventories, market hogs are also slightly higher year over year compared to trade expectations for slight decreases. The breeding herd, however, is close to pre-report expectations for a less than 1% decline, while the trade underestimated the March through May pig crop by about 1.5%. Why the discrepancies? Well, trade underestimation of market hog inventories mostly reflects lower weight hogs. Each of the lighter classes is higher compared to expectations for smaller inventories relative to last year, while only those over 180 pounds are down compared to the same time last year, albeit not quite as much as expected. Overall, the number of hogs weighing less than 180 pounds is about 0.25% larger than a year ago, which will be the market hogs arriving at processing plants from July through November. The increase in lighter weight hogs partly reflects that the March through May pig crop is over 0.75% larger than last year, despite expectations it would be about that much smaller. Expectations would have been a little closer to correct had a 2.4% decline in sow's farrow not been partly offset by a 3.3% increase in pig save per litter, which suggests the industry is overcoming health issues like PRRS that have been constraining growth in pig save per litter. That is, increases in the pig crop and the inventory of lighter weight hogs both partly reflect improvements in pig save per litter and not really changes in producer sentiments, which still support contraction as indicated by fewer sows farrowed for the period. And consistent with that sentiment, summer and fall farrowing intentions are also down nearly 4% and 4.5% respectively from actual farrowings last year. Those lower farrowing intentions should similarly imply somewhat smaller slaughter numbers in subsequent periods, but to what degree will also depend on pig save per litter, of course. Frozen stocks of pork are rebounding, but have not yet reached pre-COVID-19 levels. According to USDA cold storage report, cold stocks of pork at the end of May are down 7% from the previous month and 4% from a year ago. Poultry stocks are up 2% from the prior month and 9% from a year ago, while beef is down 6% from the prior month and down 20% from last year. While frozen pork stocks tend to decline seasonally from April through May, this is the first time this year that stocks have fallen below year-ago levels, which may be somewhat of a bullish sign for pork prices. The USDA forecasts U.S. per capita pork consumption at 50 pounds per person in 2023, falling to 49.9 pounds per person in 2024, reflecting concerns for consumer purchasing power in the face of inflation, the availability of pork, and strengthening export demand. The U.S. exported 581 million pounds of pork in April, or about 10% more than in April of 2022. While shipments to traditional customers continue, the U.S. share of pork exports should grow through 2023 with a pullback in European production due to high feed and energy costs exacerbated by the war in Ukraine. April numbers indicate U.S. pork exports grew year over year by 4% to Mexico, 26% to China, and 42% to South Korea. All major markets for which European exports declined the previous 3 months by 38.2%, 4.8%, and 32.2% respectively. The USDA estimates U.S. pork exports in the second quarter of 2023 to be 1.73 billion pounds, or 7.5% higher than last year, and forecasts the last 2 quarters of 2023 to be 6.7% and 6.9% higher respectively, placing the annual total at 7.3% above last year. The first quarter of 2024 is forecast to be about 1.75 billion pounds, or 4.6% higher than in the first quarter of 2023. Overall, with the outlook for hog prices, current cost of production exceeding $100 a hundredweight on a carcass basis, and prospects for still higher feed costs, producers will need to remain vigilant with risk management of input and output prices to find their way out of red ink and into the black. The forecast presented here is for the national weighted average net price on a carcass basis for all transactions for producer-sold barrels and gilts, including negotiated and contract prices. This net price should be more reflective of what producers receive on average and normally runs at a premium of more than $2 a hundredweight over the base price on average. From March through May, this net price averaged $79.88 a hundredweight compared to $75.39 a hundredweight for the corresponding net prices for negotiated or spot transactions. In general, hog prices tend to be higher in the second and third quarters, with lower prices in the first and fourth quarters. Consistent with that pattern, this price series is forecast to average about $89.26 a hundredweight for the third quarter of 2023, falling to $81.03 a hundredweight by the fourth quarter, and then to $79.93 a hundredweight for the first quarter of 2024, before rising to $88.18 a hundredweight for the second quarter of 2024. These projections are consistent with the supply and demand scenario currently anticipated. However, if greater production is realized or if export demand softens, realized prices may actually be lower. For the University of Illinois and Western Illinois University, I'm Jason Franken.